As we roll into the 4th anniversary of the financial meltdown, the United States government got a little bit of an anniversary gift today or yesterday. The U.S. Treasury is going to sell $18 billion worth of stock in AIG, take its stake from over half to down to under 20%. This has all kinds of ramifications. Agnes, take us through a little bit about what this is about.
I think symbolically, right? I mean, the government is getting out. AIG was considered one of the biggest basket case of the. It
was $180 billion.
Exactly, $180 billion. It was a messy bailout. The Federal Reserve was very vocal about not wanting to be anywhere near this bailout, but was forced to kind of participate
because of the interconnectedness of the institution.
Yeah, and also there was all the scandal around the bonuses. Because AIG was still paying out bonuses.
Supposed bailout through AIG of Goldman Sachs.
Exactly.
And the other
right.
banks.
It was really one of the more sordid and confusing affairs.
Exactly.
Right.
So symbolically, now the government's going to be a minority stakeholder, but also it looks like they're going to be able to net a bit of a profit on this because the stock is trading at a pretty enough.
Break-even's around $29 a share.
And it's still trading even around $33 even after the announcement. So I mean, again, it's one of those easy talking points like, hey, we're getting out of AIG. It's 4 years on. And then also, we actually made money on this. The Federal Reserve also made money on its investment in AIG. So,
right.
So that at least gives the administration a bit of a talk.
But Richard, this also has some obvious other repercussions.
There's a couple of interesting things, right? One is that it hasn't been slapped with heavy new regulation since the bailout. And one reason for that has always been, well, the government's a majority owner, so the government has that ability to control AIG. Now the government's going to be a minority owner, so the question is, and AIG have brought this up, the question is, now do they become what they call a SIFI, a systemically important financial institution? And it seems, given the history, although AIG is a bit smaller now, given the history, it seems kind of hard to argue that they shouldn't be.
Well, it sounds like the Fed will now obviously start to regulate them, which also probably means stress tests before they can do anything more.
So we don't know what of this is going to happen to AIG, but potentially all of that. I guess, given the timing, the other wrinkle is political.
Right, there's a big political aspect to this. I mean, everyone's saying this really was't done for political reasons, and that may very well be true, but of course, it can't help but have political ramifications anyway, given the election, given the idea that Obama has something to talk about in terms of getting out of.
No, I mean, I think that's exactly right. I mean, it's 2 months ahead of the election. There's definitely going to be some speeches probably around the anniversary, right? It's 4 years on. And this is another thing that Obama can point to of like, this is what we've done. This is what we've concretely done.
But let's be clear, Obama didn't start the bailouts, except of Detroit, I think.
Exactly.
AIG was started by
under Hank Paulson.
Right. But AIG is an interesting one because it was at least a 3-stage bailout, and Obama, the last stage, the biggest stage, was.
I mean, they had to administrate it and also and make the decision of when to actually sell. I mean, this isn't the first of the stock share. I think this is maybe the 4th or 5th.
Yeah, they've gone through a lot of iterations.
Exactly.
All right, well, we're going to leave it there. AIG will continue to follow that and be back with more Breaking Views tomorrow.